We finally had the PPI report on Friday, and it hit at 7:30 US Central Time. So that's right in this area price. I'm on a AIQ, Algo IQ bars 37 chart. It's a custom bar we provide with the program that aligns with our fully automated MOM signals, momentum burst trade signals strategy that we trade fully automated. And so there's 7:30 a.m. Let's take a look at that. So we can look at when did the news hit that morning. So there was the beginning of 7:30, but then look at the bottom of the chart, how long 7:30 lasts. So right there at the bottom of the chart, 7:30 lasts that entire period. And look at what the market looks like. And it's really easy to explain. And I'm using our custom Renko bars specifically designed for our program to facilitate, urgent entry at the firing off of a momentum burst trade, which had two automated trades. I was done in two trades. One was an entry that I'll cover that I didn't make anything on, didn't lose anything. Stop and move to break even plus. Second trade, and I was trading a little bit higher position size than normal. I actually thought we'd have better swings after the initial 3-minute period. So what I do when I'm trading automated on a heavy news day is I set my strategy to start at 7:33 US Central Time or Globex Chicago time. On a typical day where there's not a significant news release, I start my strategy at 8:32 a.m. So I would have been, if I just would have waited for the open, I would have been in the trade that I won and got over a daily goal on anyhow, but whatever. When there's a significant news release, I have a track record with the automation of doing exceptionally well. But I wait 3 minutes. I let the market stabilize over a 3-minute period. And that's from, many, many years of trading automated and testing. So what is the standard time it takes for a market from the instant it gets the NFP news, the instant it gets the, let's say, PPI news or the Fed interest rate decision? I'm not worried about the Fed meeting, and I guess you could call it press conference 30 minutes later. I'll trade right through that, no problem. But the actual news release, and then also like NVIDIA earnings, am I going to be trading in the over after hour session when NVIDIA earnings come out with the strategy turned on? Heck no. And you don't really know exactly when the news release is going to come out. So I'm just like, I don't think it's smart to trade automated during significant earnings releases unless you're on a much higher time frame than somebody trading intraday, scalping type time frames. So what I do is I don't tell the strategy, hey, at 7:30, and maybe 15 seconds start the strategy, and I want to catch that news release instant movement. No, that's like gambling. It's just like give the market 3 minutes to stabilize. And the reason why is why does this look like this when all the other trading does not? It's because when the news leading up to the moment the news is released and then through the news, the bid-ask spread on these instruments widens out. So instead of the bid-ask spread being right up against each other, tick to tick, you could have the bid-ask spread get 5, 6, 7, 8 ticks spread. That's horrible for automation. So if you know there's going to be a time period where the bid-ask spread's going to widen out, why would you trade through it? Just wait till after. You're still going to get a reaction after the initial. And sometimes, the initial burst might be up and then it's like, wait a minute. The news sounds good, but look at inside of it what it said. And then you get a big down, so it's like you just don't know what's going to happen. And you're in that environment where the bid-ask spread is so widened apart, it's not a safe time to trade. And I mean, you could even say, hey, I want to wait 5 minutes. I just found that 3 minutes, I'm fine. I've looked at some of the most wild news releases, and 3 minutes and beyond after the initial reaction of the news. And I mean, you can put filters in automated strategy that says, hey, if 3 minutes goes by and the bid ask spread is any more than, 2 or 3 ticks apart, don't take the trade. That's easy to do in automation. So I don't need to do that, but you can't, especially if you use third-party tools. So market's sitting here right off all-time highs, little W pattern. As that news hit, we get an initial pump, and then there's that period where the bid-ask spread is wild. So that's why I always say in all my training, and I talk about it specifically, when the bid-ask spread widens out, you don't want to be in trades, and that I generally use 3 minutes, pause, let the news reaction play out, then I'll get into the trade. And that's exactly what I did. So here's 7:33. 7:33. We'll time hack it. So basically, it should be 16 seconds after. So 7:33, there's 7:32 bar. We're getting into 7:33 even. So from that bar going forward, my automated strategy, the mom strat, is looking for trades. So let's go into strategies. Let's go to the AIQ folder. There's the Algo IQ mom strat. Let's add it. There we go. And let's turn it on. So that's the strategy that I have on, and then I have many, many, many videos here showing how it works and operating, taking trades and all that at the Grid Algo YouTube channel. First signal past 7:33 U.S. Central Time or Chicago Globex time was a short. So the strategy, actually I'll use this drawing tool, strategy gets into a trade. Somewhere in here. Oh, yeah, right there. Strategy gets into a trade. Market cycles a bit, has enough movement in my intended direction. My stop goes to break even plus. Market lifts, hits my stop, and at the completion of the next bar gets me long, and I get about 70 some points to where I hit my daily goal. So the market moved. And I was thinking when I was long, hey, we're probably going to go up here, make some push against the high. And if I see it stall out, it's a Friday and, I'm in trade number 2. I'll just take what I can get and be done for the day. Because on Fridays, I like to get done early because I've seen too many Fridays where maybe only for an hour, hour and a half is the trading good. And then we get into a narrowing range grind mess. And with the news being very positive for PPI, I thought this is what's going to happen on Friday once I saw the news. They're going to pump it up, and very early, we're going to come back down and at a minimum test this level. So right away, when I got in the first trade, I thought, oh, here we go. If we come down this level and then we hang out, I'm just blipping out. I'm done for the day. So I kind of didn't expect institutionals to come in and be buyers. And then they spent the rest of the day holding this market up. And that's what I was leading to. So I thought, what's going to happen then is they're going to do what I call a pump and park. So they pump it up, usually the day ahead of news, almost like they know exactly what the news is going to be. They hold the market, they get the news, they got a little bit of extension, and then what do? They held the market all day long. And then on a Friday, that's really, if you don't dump out early on a Friday, on a news day, where we've had a pump and park leading up to it, you're not going to get a sell-off unless, there's a tweet or something. They're going to park that sucker up there, and that's exactly what they did Friday. So I'm like, we're up at all-time highs. They snuck in the pre-market, squeaked out a higher high than before because institutionals were working it all night long, getting that market all the way back up and then peeking its head in futures above the prior all-time highs. Wasn't at all surprised in that. Then we get the news reaction. They get the range extension higher. That's the breakout. So I'm like, we're either going to come right back down and test the new all-time high early, and then we're going to break through and backfill the prior range some because they don't really like the news, or now the news is out, now they're going to be a seller, or they're going to hold it all day long. So I got the short and I thought, okay, fairly likely we should at least come down to that prior all-time high area and then new all-time high from pre-market, slightly higher than the prior one, and I'm done. So that was my strategy. Hey, I saw it get into a short. I was in long and short mode, saw it get into short, worked its way down. Thought for sure we'll backfill a little bit. We didn't. That's the beauty of automation. You have an idea what the markets do. In the end, especially with the way institutionals flow in, buy, and program sell activity to move markets to levels where they want to distribute, or move markets down to levels where they want to be a buyer, and then the rest of the day rocket launch it, you have no idea what the market's going to do. These markets are very different in the past. Old school price structure is out the window. Institutionals blow that right out of the water. They'll hold areas where there's no support from the past, like no tomorrow, and then just be buyers the rest of the day. You don't know what they're going to do. So it's like, hey, I'll just let the automation, when it sees a benchmark level of momentum in a trend continuation move or on a reversal move, I'll let it do the trading. And sure enough, pull back, just barely enough. My stop move to break even plus. Market lifts, hits my break even plus 3 ticks. So, ooh, I'm up 3 ticks. Then beautiful momentum burst alongside, and they grinded, and I was out somewhere in here at 70. I think it was 70 points. Yeah, 70 points in the money, roughly, with the size I was trading, gets me to my daily profit goal. Actually, no, 67 points. So anyhow, that had it. We traded up from my entry well over 70 points. I think almost 80 points, or 70 some points. So I was done. And then even though I would love to be short this market, even after it just made a new all-time high, if I would have gotten short, it would have come down and then cycled sideways a bit. So I was like, it's Friday. I want to get out of here early. I've said it's kind of like special operations style when you trade automated in a prop account, where you have to be flat by the end of the day. So my mentality is, hey, just go for a daily profit objective, kick down the door, neutralize the target, then go get your beers. Get in, get your hit, get out. Because the longer you expose yourself to the market, the longer you expose yourself to a combat zone, there goes your probabilities of getting hit. So the mindset should be, grab a consistent, modest amount day after day with your automation and spread it out over a ton of accounts. And that leads me to a brilliant update from one of my most favorite trade copiers, from a gentleman named Joel at Affordable Indicators. So you got to go check this out. Joel from Affordable Indicators, that guy is a fantastic, he has a fantastic product. And I don't do affiliates with anybody. I'm not into that. I make the predominance of my money trading institutional FX. Then I do pretty good on prop accounts, and I sell some software. So that's how I make my money. This guy is really good. And like I said, I would love to be an affiliate, but I just don't have time to track all that stuff. So go check out Best Trade Copier, new prop firm. Go look at the new features he just added to his Affordable Indicators, and it's his latest video. I think it just came out yesterday. I watched it, and I was just like, wow, this guy has hit it out of the park. So very, very good video. And the way he covers stuff, he covers it. I like his whole style. I like the way he runs his business. I like the way he runs his continual process improvement on a very good trade copier. So great video there. So I was 2 trades and done, fully automated. And from day to day, I have no idea what institutionals are going to do with their buy and sell program activity. So I just traded automated. So there you have it. There's the website. And if you have any questions at any time, contact me at info@gridalgo.com.